All right, guys, this is a really interesting video. Credit Karma, one of my favorite resources, was just fined $3 million for allegedly tricking users with false offers. And this comes as the average credit card debts now held by American households increased by 13% in the second quarter. This increase is the largest that we've seen from credit card debt since 1999, folks. As more of us consumers are being forced to rely on credit cards to pay for bills and record levels of inflation at this point, credit card balances increased by $46 billion from last year, making it the second largest source of overall debt last quarter. So it comes really as no surprise that companies like Credit Karma would be pushing new credit card accounts onto individuals like us, onto borrowers. After all, I mean, when demand goes up, supply is there to meet it. Unfortunately, it looks as though Credit Karma, a company that we featured and praised for its free and extremely useful credit scoring tracking app, it really has not been operating at the level that it should be. It looks as though the company was falsely leading consumers to believe that they were pre-approved for credit cards, an action that was also negatively affecting customer credit scores, which, by the way, I have to tell you is a huge resource perk that I've been acknowledging now for quite some time, that when you go in there and they make a recommendation for a credit card, it says a percentage of likelihood that you'll be approved. And ultimately that's based on presumably millions of other profiles that are similar or different from yours, which means that it's using this algorithm to track whether or not your approval rating would be high. So 1/3 of customers that applied for these pre-approved offers were declined after incurring a hard inquiry on their credit reports, which does hurt your scores. The FTC has ordered Credit Karma now to pay $3 million, which will be sent out to customers who wasted their time applying for these credit cards. They also get paid in most cases by these credit card providers as an affiliate. So they're making a ton of money along the way. They probably still came out in the green on this. The FTC action also said that the company must stop tricking customers and preserve records of its marketing so that it can be held accountable in the future. These allegedly misleading offers were issued by Credit Karma between February of 2018 through April of 2021. I'd be curious to know if any of you guys have experienced this and if your credit score was negatively impacted as a result. So please do share your story in the comments, of course, below. We all need to band together on these types of resources. But like I said earlier, credit card debt is becoming more and more of a necessary evil for individuals and for families that are negatively being affected by inflation and trying to navigate the costly realities that come from record inflation rates. Not only are more Americans now relying on credit cards to make ends meet, they're simultaneously seeing their credit scores fall lower and lower because of that utilization. And this is not a good cycle to find yourself in, as anyone that's been there can attest to this, myself included. A big piece to why we do this channel, but it's a vicious cycle. It's made worse when you factor in the dramatic rise in cost of living. Credit card balance is jumping 13% in just one quarter, and then the rise of the average credit card rate to 17%. 17 is significantly higher than nearly every other consumer loan that you could get. The future really is looking more concerning, as many are estimating that the average credit card rate may even top 19% by the end of the year. For anyone keeping score at home, 19% would be an all-time high of credit card interest rates. So what can be done for those who are struggling with mounting credit card and non-mortgage related debt? Well, fortunately, there are many options for paying off high credit card debts. A strategy like the snowball method has been popularized by our friend Dave Ramsey and features a simple way forward that reinforces your work with the most immediate positive feedback. This is because you pay off the card with the smallest balance first. The thought here is that you gain momentum as you begin to see credit card balances eliminated sooner than you would if you were to attack the card, say, with the highest interest rate first, known as the avalanche method. Focusing on highest interest rate first is a method that saves you the most money in the long run. Everybody should know that. It's fairly basic mathematics. But many find it to be more straining. It just might take a while, as it may be longer before you see your first balance go to zero. The most important thing here is really choosing the strategy that you're willing to stick to. The number one ingredient is consistency. It is the key when it comes to paying off your debt. Beyond approach and consistency, it's crucial to note that you'll pay less interest overall if you pay more than the minimum payment every single month on your card. This goes without saying, I hope, at this point in your life. The minimum payment should be seen as a thorn in your side. It will stick around for decades. Those balances will stick around for literally decades. That does very little for your progress while doing a lot for the credit card companies in profits. So for those who are trying to maximize their credit scores while also paying down credit card debt, it's also important to familiarize yourself with the statement closing deadlines as well. And this is another date that's associated with your accounts, typically going to land well before your due date, oftentimes weeks before. The statement closing deadline is the date that the credit cards, the companies that provide you the card itself and lend you the money, they send out your balance and your debt availability ratio to the credit reporting agencies as well. So not only is it the last day that transactions are added to that billing cycle, they also report on or around that date too. So when you pay before the statement closing deadline, you actually give yourself the best chance at having a lower debt availability ratio, which turns positively towards your credit scores quite dramatically. In fact, for those that are looking for some real top tier advanced strategies for quickly eliminating credit card debt, I'd actually recommend you check out our other videos here on paycheck parking, otherwise known as velocity banking. It's the most powerful way to reduce debt in a fraction of the time. Again, consistency is key with this strategy and may even be more advanced than necessary, but for some, it's really worth it. You'll be amazed at how quickly you can really crush your credit card debts, auto loans, student loans, etc. So what do you guys think about this Credit Karma scandal? Are you as disappointed to hear about this as, say, I am? Look, I really have come to appreciate certain resources and have relied on them as tools for not just myself, but recommendations to others. And if this has landed you in a declination based on the application that you submitted, I'd love to hear your story in the comment section. If you've been able to apply for a credit card through Credit Karma and were approved for it based on their recommendation, we'd love to hear about that too. I personally have had only that experience, but as we know now, the credit card companies are paying Credit Karma for every application that's submitted. So it's hard to say that they're going to really care about your well-being. They just want as many applications to come in as possible. If they're making $15 per application and 1 million applicants come through in a month, that's a $15 million income stream for them for that month. So this seems pretty shady. What are your thoughts, folks? I will still continue to recommend Credit Karma as a resource. Might just make sense for you to be a little bit more cautious about whether or not you apply and know for sure that your credit profile is going to be strong enough to get that approval. Worst case, you end up with an inquiry. It's not the end of the world, but I always recommend attempting to avoid those and being very strategic about the applications you submit. Guys, very good to see you here on the video. As usual, if you're not subscribed, consider subscribing. We talk about a lot of cool stuff as it pertains to your money, so we would love to have you join us on our next video. Turn those notification bells on so that you get the alert. And until then, make it a great day today and keep on cash flowing. See you soon.